Last week, your lemonade stand had $100 in cash. This week, it has $150. Sounds like you made $50, right? Not necessarily. Maybe your parents gave you money, maybe you took out a loan, maybe you spent money on supplies. To find out whether your lemonade stand actually made money, you need something called an income statement. Today, we're going to break down one of the most important financial statements in business, the income statement. We'll cover what it is, how it works, why it matters, and we'll use a lemonade stand to make everything easy to understand. So, what is an income statement, you ask? An income statement is a report that shows how much money a business stand earned and spent over a period of time. Unlike a balance sheet, which is a snapshot at one moment, an income statement tells a story over time. For example, a balance sheet answers, what does the business look like right now? An income statement answers, what happened during the month, the quarter, or the year? The goal of the income statement is simple. Did the business make a profit or loss? What does the business look like right now? The main parts of an income statement, there are three key pieces you need to know. The revenue. Revenue is the money a business earns from selling its products or services. For a lemonade stand, revenue is the money customers pay for lemonade. Then come the expenses. Expenses are the costs of running the business. For a lemonade stand, that could include lemons, sugar, cups, ice, and anything else needed to make and sell lemonade. And lastly, net income. Net income is what's left after expenses are subtracted from revenue. People often call this profit. The formula is net income equals revenue minus expenses. Let's build an income statement for our stand. Suppose during the week you sold 100 cups of lemonade for $2 each. Your revenue would be $200. So your stand generated $200 in revenue. But making lemonade isn't free. Let's say your costs were $40 for lemons, $20 for sugar, $10 for cups, and $10 for ice. Your total expenses come up to $80. Now we calculate net income. 200 minus 80 gives us 120. That is our profit that our lemonade stand made. So income statement will look something like this. With revenue at 200, expenses at 80, and net income at 120. And that's how we note that businesses actually made money. So why do businesses care so much about income statements? Because revenue alone doesn't tell the whole story. Imagine two lemonade stands. Each make $200 in sales. One spends $80 on supplies and the other spends $190. Both generate the same revenue, but one is far more profitable. The income statement helps owners answer questions like, are we making money? Are expenses too high? Is profit growing? And should we change our prices or not? If you watch my balance sheet video, here's how the two connect. The income statement measures performance over time. The balance sheet shows the financial position at a specific moment. When your lemonade stand earns $120 of profit, the profit eventually increases your cash and your equity on the balance sheet. So the income statement helps explain why the balance sheet changes. Think of it this way. The balance sheet is a photograph. The income statement is a movie that explains how you got there. Every business uses income statements. Small businesses use them, restaurants use them, and giant companies like Netflix and Starbucks too. Investors look at income statements to see whether a company is growing profits and generating sustainable earnings. And as the numbers get larger, but the concept stays exactly the same as your lemonade stand. So remember, revenue is money earned, expenses is the money spent, and net income is what's left over. The income statement tells us whether of businesses actually making money. And whether you're running a lemonade stand or analyzing a billion-dollar corporation, understanding the income statement is one of the most valuable financial skills you can have. If you found this helpful, subscribe for more simple accounting and finance lessons, and I'll see you in the next video. Thank you.